You're listening to Top Dollar, a podcast focused on giving people meaningful knowledge in the financial world. My name is Andrew Eisel alongside Wesley Young, and we are your co-hosts, providing you with our insights on trades you should consider, financial news, and everything in between. Thanks for tuning in. Okay, and we are back on another Sunday with episode 4 of the Top Dollar podcast. I'm very excited to be back for episode 4.
Yeah, we're going to do, we're kind of going to do a little bit of a different topic today. We're going to talk about the importance of investing, and if you're, we've noticed that a lot of our viewers are actually like high school kids or younger kids that may be kind of new to the investing world. So we're going to kind of do a little bit more of, not like really teaching, but like, you know, what's
kind of like a why invest.
Yeah, and why invest, and like, you know,
what are the benefits of it,
like what are you planning for and stuff like that. Yeah, exactly. So we're going to kind of mix it up like that today.
Okay, so I guess that is kind of an intro for our first segment that we'll hop into, and that is the importance and, you know, why invest. So kind of a general statement about investing is that it's an effective way to put your money, you know, towards something to build its wealth, so that it's not sitting stagnant in like a checking account or something like that. Yeah. And so that when you're investing, your money has the potential to grow and
exponentially.
Yeah. And yeah, that's always an optimistic view of it, is that when you put your money into a portfolio, that in a week's time, you want to have more money than what you started with. And at the same time,
it's always the goal.
Yeah. At the same time, you can lose money as well, but you know, nobody goes into the market wanting to lose money.
Exactly. And
so go ahead.
There's a difference between short-term and long-term investing as well. Whenever we're talking about the importance of investing, we're looking more towards the long-term. You know, you're planning for 20 years in the future, 30 years, or even retirement whenever you invest. And a lot of, like me and Andrew right now, we do a lot of short-term investing. We like to move money around. We see picks for like maybe a few days that are going to be hot, or a few weeks.
I wouldn't call myself a full-blown day trader, but
no,
I know.
Neither
I definitely like moving in the short term because I like to make some quick gains and stuff like that.
And it's always important to have a little portion of your portfolio or what you're working with in for long-term gains. So that's kind of like your little base, and you can get as risky as you want with it. You could go with ETFs, mutual funds, or just stocks that you may like to see in 5 years or so.
Why do you think, not to interview you, but why do you think you got started in investing? Like, what was your first time you saw it? You're like, hey, I want to get started in that.
I've like ever since, I've always been a fan of Elon Musk since a young kid, and him with the creation of Tesla, and I was always attracted to like the futuristic electronic cars, like self-driving. So that's what really got me into, the market. I was like, hey, Dad, I want to buy one share of Tesla and hold on to it and just see what happens. So that was my first really way that I got introduced to the market. And now I've learned so much about, the importance of why you should invest in, long-term goals and stuff like that. So how about yourself? How'd you get?
I actually started when I was probably 15. I didn't invest in the stock market because you have to be 18.
Yeah.
But I wanted to invest because the idea of growing the money that you had always piqued my interest. So what I did is there is a company called Uphold that you can trade crypto through. And at the time, it was a brand new company. You didn't have to be 18, although now with new laws, you do have to be 18 to trade crypto. So I was only 15, but I had gotten an account, and I think they're not even based in the U.S. Like, it's an account, it's based somewhere else.
Yeah.
But anyway, I would like buy and sell like different types of altcoins and stuff like that. I was in XRP, I was in Litecoin, I was in Bitcoin. Wow. So there's nothing really.
So that's like a completely different market than the one that
it's a completely different market, but at the same time, we've talked on the show before about how cryptos can be used with investing and stuff like that. So that's how I got into it. And then the day I turned 18, I signed up for a Robinhood account and just immediately started diving into the stock market and looking into that. And, now my whole future is kind of based off that, going to college for finance,
Yeah, exactly.
want to do some stuff like that, and I'm sure you are going along the same path too.
Yep. And so it is true that if you want to create your own account, you do have to be 18. But there's the way that I did it is my dad set up a custodial account for me.
Okay.
So he used his stuff, and he put me as a custodian, so that when I was 16, it would be his guidance. But it's like my money invested.
So when you turn 18, it becomes your own account.
Exactly.
Yeah,
So when you're 18, it's your account. So that's
what
I did.
That didn't work out in my house. I had to jerry rig my own way to invest.
Exactly.
But another thing about investing too is that there's a lot of potential for large gains in the long run. Kind of a compound,
steady.
like a compound interest sort of thing, where in very broad terms, we have a couple of cool statistics. But if you put $1,000 in, at the end of that week, you have, let's say, $1,100. Then the following week to invest, you can invest the money that you just made. So not
1,100.
So then you're investing 1,100 instead of 1,000. So
yeah,
you've more potential for more growth.
That's the basics of compound interest and what a lot of people are going for whenever you invest.
Yeah, that's a big attraction to the stock market, which a lot of people have their 401ks, their whole retirement funds based with compound interest sort of things, where they're growing the money they have. So when they do retire, they have a lot of money,
a lot more than what they started with, and rather than just playing it safe and maybe putting it in bonds and only getting a percentage or so, you can put it right in the market. And on average, the S&P varies from 5% to 7%. I mean, last month it just had its best month, and it was up 11%. So we always talk about the green side, but there is obviously a lot of red side to it. But on average, the S&P gets about a 5% return per year. So that's kind of what we're going to be basing these statistics off of.
Yeah, you can go ahead and read off the first statistic you came up with there.
So if you were to start at age 18, and why I say that is because the earlier you start and you get your money in, the more you obviously have at the end. So if you start at age 18 and invest $1,000 today in the S&P 500, and you just put it in there and you don't look at it until you're 65. So with a moderate growth rate of 5% per year, like I was talking about earlier, at age 65, that $1,000 will be worth $23,839.
Holy cow. So yeah, that's what we were kind of talking about, the compound interest and how there's a big potential in the long run.
And that's only just based off an initial investment of $1,000. And, throughout your working career, you're going to contribute towards a 401k, and that money can grow exponentially for whenever you go to retire at age 65 or something.
Yeah, and there are other things you can invest your money into. I mean, you have IRAs, Roth IRAs, which are kind of tax-free accounts where when you go to retire, you can take your money out and it's tax-free, although it's kind of backwards. They tax the money going in, but that's other topics.
Yeah.
But there's a bunch of different things that you can put your money into. You have ETFs, you can even do bonds, you could do different trust funds where you're still investing your money in the market, but it's just in a variety of different ways.
And the key concept that I see here is diversification. So whenever I say investing in the S&P 500, that's taking your money and splitting it up into 500 different companies.
Yeah.
So if one company completely goes bankrupt, you'll see a little bit of a red side because of that, but there's also 499 other companies that.
Yeah, and even if you didn't think the S&P 500 was for you, you could work with the Nasdaq, which is a lot of the technological and tech companies. If you think there's a future in that, I mean, really, there's infinite different routes you could take.
Correct. And there's a lot of right now there are ETFs that specifically track the S&P, the Nasdaq, like you were talking about. So they're kind of not cheap to get into, but they don't cost as much as the actual S&P 500. I think SPY is trading at $292 a share. So
yeah, not bad. And then there's probably different variations of that SPY where one's probably around just kind of works in tens, so it'd be 29 something like that.
And whenever you go into those different ETFs, they also have different holding percentages. So SPY, I think it's 4.5% of its holdings are in Microsoft, which is a big company in the S&P 500, and they diversify it based on that way, and they get all 500 of those companies in there. So,
So another scenario we were talking about with this compound interest sort of thing is if you contributed $50 a month into the S&P 500 for 65 years, so you're looking at, $50 times 12 and then multiply that by 65 at a 5% interest rate, your investment, that's compound interest too. Your investment would be worth $275,270, which is kind of astronomical if you think about it. I mean,
for only $50 a month.
Yeah, I'm sure everybody could think, there's $50 here, $50 there, and your video game eaten out maybe twice.
Yeah.
So if you just $50 a month into a solid ETF or mutual fund that
exactly,
and that's at 5% is pretty conservative too. I mean, there's if you found some good mutual funds that were worth 6, 7, maybe even 8%, you're looking at much greater growth.
Yeah, correct. And if you even increase that percentage by 0.5%, you'll see that number jump up maybe in the 300,000 mark.
So your total investment, if you're before the compound interest, would have been 39,000.
Yep. So you would have put in 39,000 from age 18 until you're 65. You would have walked away with 275,000.
Yeah. Now, if you're thinking, economically, and you're thinking about inflation rates and stuff like that, well, the inflation rate on average is what, around
2 to 3%.
2 to 3%. So you're kind of outworking the market, and you're the inflation rate 2% there. Yeah,
correct. And you're going to be 2% above the average inflation rate every year. So, which is, going back to if you have your money sitting in a savings account, it is obviously a lot more safer, and there's no risk to that. But you are not putting your money in a position to outpace the inflation rate. So you're kind of losing money technically, but it's based on the inflation rate. If it's really high inflation, you're losing more money that year, or like your dollar value goes down that year. So
now, like we were talking about, when you're young, we always don't have a ton of money. So if you're thinking about liquidity, obviously a money in a portfolio, you can't go. You can't be like, go to Sheets and be like, hey,
instantly.
here's a share of Inovio. Can I have an MTO?
Here's a 64th of a share of Apple. Can I buy this MTO?
Yeah. Now, another thing, some questions that, people have texted me about and asked me about is, what's a good trading platform? And really, it's really based on preference. Most of them now are
they're mostly free to use.
Yeah, they're mostly all commission free.
Correct. So what that means is whenever you go to buy a stock, the trading company, whether it's Charles Schwab, TD Ameritrade, E-Trade,
Robinhood, stuff like that.
Yeah, they're not charging you money to actually purchase that stock.
Yeah, usually like 30 years ago, you'd have had to get a broker to pay you, upwards of $30, $40 a trade, which is kind of ridiculous if you think about it.
Right now, on my phone, I could literally just go buy a stock right now if I wanted to.
So what platform are you on, and what led you to it? And maybe give us some pros and cons of it.
So I'm on Charles Schwab right now, and my dad actually put me on it. That's where I created that joint account through, and they have a really good track record of their trades usually go in like instantly. And that's another thing you want to look at if you're like day trading or week trading. It's important to have your trades go in at a certain time when you want it. So that's kind of why.
Yeah, execution times are, and they can be important depending on what kind of trader you want to be.
Correct.
So
if I were to redo it though, I might use TD Ameritrade because they have those like specialists that you can call and like talk to all the time, and they have a really good
software.
Trading, software
Thinkorswim.
Trading.
It's called Thinkorswim. Yeah.
Yep.
Super good.
Yeah, it's really good.
So I have 2 different brokerage accounts. I have one with TD Ameritrade, which I usually trade some of the more high-priced stocks and stuff like that. And they have Thinkorswim is very advanced. I'm going to say I don't know probably 80% of the tools on there. Like a lot of the things are like crazy stuff that you see on a giant computer.
Yeah, and
with dual monitors set up. The guy's looking everywhere to see all the graphs going up and down, and
they have like really crazy what are they called? Not tickers, but the like
different types of graphs, like candlestick graphs and stuff like that.
Exactly. And I forget the word, but yeah, they do have a lot of different stuff on there.
Yeah, and so like I said, they're super advanced. They have good execution times.
Yep.
And as far as ease to use, you definitely need to know what you're doing if you're in that. If you're in Thinkorswim or TD Ameritrade, stuff like that.
Yeah.
And what I use more is my Robinhood account, and
because the ease of use is probably a lot.
Oh my gosh, Robinhood's so easy to use. It's the user interface is great. It's super easy to look at and tell what stock's going up, what stock's going down.
Yep.
If you follow our Instagram, a lot of the pictures that are posted on our story, those are mostly all from Robinhood.
Yep. So they just lay it out clear and simple. Where TD Ameritrade, you can pick. The word was indicators that I was trying to think about. So different indicators.
Oh yeah.
That show you how stocks move.
You can really
like
customize your graph however you want it.
Correct.
And the other thing
that's for more advanced though.
Yeah.
So.
One con about Robinhood that I'd say I don't love is the execution times. Now, obviously, Robinhood's going to make money. So when I say execution time, when you hit buy trade, it goes in immediately. But the execution price, I should say, is the better term. Yeah. So what happens is, let's say a Novio or just a random stock is tearing up right now. It's doing really good, and I want to get in. I see it dip a little bit,
at a certain price,
and I see it. And let's say it dips to $16. I want to get in at $16. It's tough to do that because, let's say I buy 50 shares at $16. That's what I'll get my shares at, but it'll actually cost me maybe $16.03 per share, because that's how Robinhood makes their money.
Yeah, correct. And then Robinhood will take that 3% a share, and that's
they'll take that 3 cents extra on the share that you had to pay. Correct. So and their execution times are
they're give and take.
They're give and take.
It's free, but they.
Yeah.
As a long-term if you're a long-term investor though, and you're looking out like maybe 2 years ahead, or even a year ahead, that really doesn't matter to you at all.
And like I said, I like to invest in the short term. I like to do swing trades. Robinhood doesn't let you do, and no brokerage really lets you do any day trades unless I think you have 25 grand in. But if you're investing in the short term, but every brokerage has their ups and downs, and that's what I use. That's Wes uses Charles Schwab.
I've had no problems with Charles Schwab. So.
Yeah, there's also E-Trade out there. What did we say? TD Ameritrade we covered.
TD Ameritrade.
Yeah, so we covered a bunch of them. I think a lot of them, they all work. They all do the New York Stock Exchange and the NASDAQ. They all sell the same stuff. It's just kind of how you want to build your interface and what's best for you. Just driving my car might be different than driving your car because you like one thing and I like another thing.
What you get used to. Once you start with one, you usually don't switch over to another brokerage because how that one works.
Another thing that I like about Robinhood is the instant deposits they have. They'll kind of loan you money in a way so that you can start trading instantly.
Okay.
If I wanted to put $700 in my account or even $1,000, they'll give you an instant deposit until your bank clears that transfer to then go into your Robinhood account.
So you can buy
yes.
If you see a really good price,
you say, hey,
stock's hot.
You see a $2,000 stock, but you only have $500 in your account. You can put $1,500 in, you get it instantly, which is something I really like. And they have another feature called Robinhood Gold, where they'll give you margin, or you can buy with some of that. Which I
don't really know much about margin. That's
risky.
That's really advanced.
They're giving you money to trade and stuff like that, and Robinhood Gold will give you some extra features.
That's not for the basic investors.
Yeah. But just trying to put some information out there like that. And the other thing I like about Robinhood is if you're worried about some tax info and doing taxes with your trades, and they have capital gains and stuff like that, which we won't get into right now because that'll take up another.
It's very complicated.
That'll take up another 30 minutes. But they work with TurboTax, where you can just import all your trades, and it'll go right into. I think it's one of the tax forms that you can use. So anyway, that's kind of an in-depth review, I'd say, of Robinhood. But there you go.
Another thing that I want to talk about is dividend yields that stocks offer. Specific stocks. We always see Goldman Sachs and these companies that offer these dividend yields. And what a dividend yield is, they pay you for owning a share of their stock. So if you buy a share of Goldman Sachs at $50 a share and you get a 5% dividend yield, you'll get $5 back every year. So that's another way, kind of, if you do a passive income, and that'll actually add to your,
Total
investment by the time you're 65.
Yeah, they're kind of just saying, hey, thanks for investing with us. Here's kind of like a token of our gratitude. So here's some money for investing with us.
You also have the option to reinvest your dividends as well. So if you really like that company and they give you $5, you can put that $5 back into a portion of a stock and then reinvest it as well.
Yeah, that's kind of probably what they're hoping you do.
Yeah, exactly.
I mean, they're giving you money to give right back to them.
Exactly.
So.
And a lot of people do that. So a lot of people, they might have 1,000 shares, so they might have $5,000 worth of dividend yields, and they'll buy more shares of that stock if they still like it for the future. So
gotcha.
That's kind of the final thing about the basics of investing. And
if you guys have any questions, you can DM us on Instagram. We'll answer them. If they're more opinionated questions, stuff like that, or in the comments, whatever. We're here to give you our insights, like we said,
help you out,
like it says in the intro. So we'll go from there, and guess we'll hop into our kind of second and final segment of the day. One that I said we will keep going is the Buster Boom.
Yep.
So,
let me start off with mine, or
yeah, I guess we can kind of do a recap of week 3, which it's not over yet. It's a very close race. I was in Shopify. They were at about $600 to open the week, and they were up almost 15%, although as we're speaking, they're kind of falling a little bit.
The market actually just closed about a few minutes ago, so the numbers are fine now. But whenever we did them, they were still trading a little bit, so they shouldn't fluctuate that much.
Yeah, and it'll kind of come down to the after hours here to see what happens. But Shopify was up about 14.5%, and like I said, I really do think it was based or because of it's an e-commerce website. Not only are they getting income from sales that are made on websites that they help create, but they're also getting money from the creators to create those websites.
Correct.
I said create a lot, but it's
that's what they're known.
That's
for.
what they're known for, creating websites.
They create a platform for you to trade, or not to trade, but to sell,
and stuff like that. So and how did Activision Blizzard do? They did well.
Activision Blizzard was up 12% this week. So Andrew had me by 2.5%. But I still, 12% 1 week is a really good gain for an individual stock like Activision Blizzard, especially whenever they were as high as they were at their 52-week high. And I talked about in the last podcast, if they beat their earnings, we could see them pushing up into the low 70s. Right now, they're trading at $73.14 a share after beating their Q1 earnings. So
and if you take into consideration the stats we gave earlier about the 5%. Annual compound interest rate.
We just saw 12% and 14.5% right there.
Yeah, so I mean,
there's pros and cons. There's obviously a huge amount more risk if you're investing in individual stocks rather than diversifying your portfolio. And that's always something you can take into consideration as well.
Yeah, for sure.
Whenever you're investing.
So I'll hop into our week 4 picks. Hopefully the score ends up 2-1 my favor in the after hours, and so I'll start it off here. I wanted to get back into my pharmaceutical tear, and because I think they're super hot right now.
They are.
This week's pharmaceutical is Sorrento Therapeutics. They are another biopharmaceutical company, and they work with. They kind of do joint operations with other companies to develop new drugs for not only cancer research, but other diseases too.
Okay.
As every drug company is right now working on treatments for COVID-19.
Yeah, they all have a little bit of, a stake in we figure this out. There's a huge upside. So
the last 2 pharmaceuticals that I had picked were looking for a vaccine
directly,
for coronavirus, but this one is working and researching for more of a not a vaccine, but not even a cure, but kind of like remedies to help you get over it and help people live and get through it.
So maybe like reduces the side effects or something like that.
Just like different drugs, you have a headache, you take ibuprofen, and it helps it go away. So just kind of to help people get through that stuff. So I kind of say the same spiel with every pharmaceutical I say. There's a huge payoff if they're in the news and they get, a positive test,
and a lot of people,
and their drugs work, there's going to be a big upside to that.
Yeah, and a lot of people, like to see their name in the news. They'll jump in, maybe buy a few shares, day trade a little bit, drive up the volume, and
last week they were up almost 15%, and I hope to see another return similar to that this week. So, what was your pick for this week, Wes?
So my Buster Boom pick, was Slack Technologies. Their ticker is WORK.
So kind of cool.
Yeah, and that's exactly what they do. They're a collaborative work platform that brings employees together online to run their business. And currently, and even a month prior to now, everyone's doing business online, and they're all collaborating online. So Slack has 65 clients from the Fortune 100 companies. So they have a wide range of stable income and stuff like that. They also provide support to smaller corner stores as well, like mom and pop shops. So they cover anywhere from the big Fortune 100 companies to the smaller companies as well. And they provide, whenever you buy into their technology, into their platform, they provide you with 2,000 different apps to help run your business, do analytics, which is important for those businesses.
For sure.
So.
Yeah. So,
and speaking about their stock, right now they're trading at 31 a share, and their 52-week high is 42 a share. They currently beat their quarter one earnings, so I think that this might be a good inter-quarter play, and if you want to invest for maybe 2 months, 3 months out, or even short term, I think that we're going to see some upside, and especially because of now a lot of businesses are driven through collaboration online. So that's my reasoning for working.
Yeah, it sounds like a good pick. I think that's a solid play. I think Sorrento Therapeutics, their earnings are coming out on the 19th.
Okay.
And kind of a strategy I've been using right now is when a company comes out with their earnings, there's going to be either a huge surge or a big downturn.
Yeah,
so
there's
that's really
a lot of swinging.
It's definitely a gamble,
price.
but like Penn National Gaming, they just had their earnings. They actually had
better earnings than they.
No, they were actually worse than they thought, but their stock went up anyway. So
that's so strange.
Yeah,
Maybe
I was actually
like people were predicting that they were going to be worse than they were. Like actually were. I don't know. That is strange, but
yeah, I'm not sure.
You never know.
Well, in any sense, that will conclude our 4th episode here, and
remember to follow us on Instagram, Top Dollar Podcast.
That's right. And if you enjoyed what you heard, don't forget to tune in. We post every Sunday around noon. And we hope to keep this up and running for a while we're kind of still stuck in quarantine. Yeah. Although we are moving, Blair County is moving towards, and we're going to be in yellow here pretty soon.
That's good news.
So it's positive. But anyway, thanks for tuning in, and we'll catch you next time.
Yep, catch you guys next.